And so while folks are starting to introduce themselves via the chat, it's my pleasure and honor to introduce Lucretia Young, State Director from AARP Delaware, to kick us off with some opening comments. Lucretia, over to you.
Thank you, Colin, and good afternoon to everybody. And thank you all for joining us today for the Delaware Earns webinar, A Brighter Future. As Colin mentioned, my name is Lucretia Young, and I'm the State Director for AARP Delaware, and it's certainly my pleasure to welcome you here today. As many of you already know, Delaware Earns is a retirement savings program sponsored by the Office of our State Treasurer. Here in Delaware, nearly 150,000 workers have no way to save for retirement through their workplace. This program has created a bridge for our state's retirement savings gap. And AARP has been a proud supporter working next to our state treasurer as a partner with our state treasurer, Colleen Davis, and her team, amongst others, to ensure that all Delawareans have a chance to save regardless of where they work. Today's webinar is very, very important as it will give you information, instructions, and just some key pieces on Delaware Earns. For business owners that care about employees but struggle to offer a retirement benefit package, Delaware Earns is certainly a solution for you. So with that said, at this point, I'd like to introduce Delaware State Treasurer, Colleen Davis.
Thank you so much. Lucretia Young, you are phenomenal and you have worked so hard to help us get here. Thank you. Thank you so much. Well, good afternoon, everyone. It's great to be with you. I'm Colleen Davis, your state treasurer. I am joined by our fantastic Earns program director, Ted Griffith. Yes, there he is. Give a wave. Thanks to all of you for taking the time to join us today. It's really fantastic to see all of the businesses that are on. You guys are sort of hailing from Wilmington, which is where I am this morning or this afternoon. From Wilmington to Newark to Lewis to Harrington. It's really fantastic to see all of you. And I'm really excited to talk about this retirement benefit that really is focused on private sector workers who don't have access to savings at their jobs. Delaware Earns is really focused on ensuring that that folks are given the chance to save for their retirement. And before we get into some of those details, I do want to speak about some of the larger significance of Delaware Earns and why personally this program is such a priority and so meaningful to me. Many of you may know this, but growing up in Sussex County, I saw firsthand the hardships that families can face. My own parents struggled financially after my father's company fell victim to fraud. And that experience makes me committed to improving financial security and resilience for both workers and small businesses that employ them. And what Delaware Earns is ultimately about is making sure that no one is denied secure retirement. So how will Delaware Earns help? What is it and what are we up to? Earns is a retirement savings program. It's sponsored by my office. Ted, again, is going to get into more of those details, but it really is for private sector workers without workplace retirement plans. The program will create a pathway to economic security and financial empowerment for workers. It also lets businesses offer a competitive benefit at no cost to employers, and ultimately will save taxpayers millions, potentially hundreds of millions in the future. I do want to turn it over to Ted. We look forward to your questions at the end. And again, I'm so grateful to see such a diverse and large swath of fantastic businesses on today.
Treasurer Davis, thank you so much. As Treasurer Davis said, I'm Ted Griffith. I'm the program director for Delaware Earns. And as we have mentioned, Delaware Earns is a new retirement savings program sponsored by the state, but designed to provide private sector workers who currently do not have any way to save for retirement, retirement savings accounts through payroll. And one question that we sometimes get is, why is the state getting involved with something that has traditionally always been the domain of the private sector? And the very short answer is we are facing a crisis when it comes to retirement and retirement savings. I don't think this will be news to anybody on this call, but probably almost all of us are not saving enough for retirement. That's probably a true statement. But even more significantly, there's a very substantial portion of the population that is saving nothing whatsoever. And this is a demographic time bomb that will go off every year that people reach retirement. And it's going to cost us as taxpayers a lot of money if we don't do anything about it. So that's the bad news. But I will make it clear that under Treasurer Davis's leadership, we don't want to just forecast that there's a problem. We want to try to put forward a solution. And that's one of the exciting things about Delaware Earns. I think there's so much sort of negative news right now, and it almost seems like it's hard to make any headway against problems to improve things. The great thing about Delaware Earns is we know that something as simple as giving folks the opportunity to save in a retirement savings account through payroll increases by 15-fold the likelihood that they will save for retirement. And that's research done by our friends here at AARP. So I think there's very few things that I can think of where you would have that exponential improvement just by taking this simple step. So that's why we're doing it. And as was mentioned, we're really looking forward to your questions. You, as business owners, you are very much supported in this, and we're looking forward to helping you. For the rest of the presentation, we're going to talk in real detail about how this affects employers and how it affects employees. And again, we welcome your questions. For employers, this is a mandatory program if you meet certain criteria, and those criteria are up on the screen now that you should be able to see. So if you're an employer, private sector employer, for-profit or nonprofit, you have 5 W-2 employees or more, and they could be full or part-time, and they could be very, very part-time. But if you're issuing them W-2s and there's 5 or more, and you don't have a retirement plan, such as a 401k or the 403b that's very prominent in the nonprofit arena, and you've been in business for 6 months, you do need to facilitate Delaware Earns. And this is a very timely webinar, and that's why we appreciate you joining us, because we do need you to go before October 15th, so just a week out, to earnsdelaware.com and register if you fall into this 3 criteria. Again, we often get questions from employers about, well, you say if I have a retirement plan, I'm completely exempt from Delaware Earns, which is absolutely correct. But what types of retirement plans would qualify me to be exempt from Delaware Earns? And you can see those right up on your screen right now. It's the standard list of qualified retirement plans. And including the defined benefit pension plan, but starting with the 401k and kind of going on from there. This is probably also a good moment to say Delaware Earns in no way is meant to compete with private sector retirement plans. If you're an employer on this call who's offering a 401k or one of these other plans, absolutely keep that in place. It's very beneficial to your employees, and that's what we want to see you doing. And again, you're exempt from Earns if you do. All right, so turning to employees, as I mentioned, for certain employers, this is a mandatory program, but mandatory with no cost to the employer. On the employee side, this is an entirely voluntary program in all instances, but it's voluntary on an opt-out basis. And what I mean by that is unless the employee takes action, unless the employee opts out either by going on the website or calling in, unless they opt out, 5% of their gross paycheck will automatically be deducted every payroll cycle and go into a Roth IRA for their benefit. So again, employees are not obligated to participate, back to the retirement crisis that I was talking about, we very much hope they will participate. But if they don't want to participate, they need to take action. They need to opt out. And happy to answer questions about that as well as we move along. All right, so this is perhaps the really key thing to take away from today. If you're just going to take away one thing, if you don't have a retirement plan and you have 5 or more W-2 employees, full or part-time, you do need to be going to DelawareEarns.com really as soon as you can, because the deadline is October 15th. And again, there's a lot of support for you. We will be covering that and going through it. But this is what you need to do. All right, so Delaware Earns obviously is a new program, and inevitably, with anything new, some misconceptions do develop, and that's certainly the case here. So we have heard that some employers are hearing that they absolutely have to purchase a retirement plan. This is not the case. You do not need to purchase a retirement plan. As I mentioned, Delaware Earns will provide this service to you completely free of cost. If you, as an employer, would like to purchase a retirement plan, of course, as I said, we welcome that. But it is not correct if you're hearing from anybody that you have to buy a 401k, that is not correct, because you can always plug into Delaware Earns, and we do not charge any fees for employers to participate. So I really want to clear up that myth. And again, happy to answer any questions about that. Another myth that you see there is that Earns is difficult to administer, and that is absolutely not the case. In fact, Earns is much easier to administer than your standard 401k. And I want to walk you through the steps so you can really see what I'm talking about. So these are the 3 steps, and I'll provide detail on each one. But it's just registering at the website. That's the very first thing you need to do, is register your business at earnsdelaware.com. Then you will establish regular payroll deductions, and then you just need to maintain it. So those are the 3 steps. The very first thing you need to do, if you're an employer that meet the criteria that I was talking about, you need to go to earnsdelaware.com. You enter in your EIN, and you also enter in a unique registration code. Now, we have been sending out thousands of letters to employers throughout the state with this code. But in some cases, our data might be a little bit out of date, so you might not have gotten it in the mail. Or if you're like me, sometimes you get mail and not sure what to do with it, and you just toss it. So if you don't have the code, that is not a concern at all. Still go to earnsdelaware.com. You should be able to obtain your unique registration code simply by putting in your EIN, and it should come back to you. If that fails, it's not a deal breaker either. You can simply call in to the call center. We're up and running now, or write in at client services at earnsdelaware.com, and we'll get you that code. So if you don't have the code, no worries whatsoever. All right, and as I said, I want to walk you through each of these 3 steps so you can see what I'm talking about when it's not a huge administrative burden. It's just these 3 steps. So once you've gotten into the website, you've put in the EIN and your unique registration code. Of course, you set up, just as you always would, an ID and password, and then you provide just some basic information about your business, which you already have. So this is basic information about your business, your payroll cycle, your payroll provider, and then you establish a payment setup by linking up your bank, just as you would in other cases. And then the last piece of this registration step is uploading information, and it's all very, very secure at earnsdelaware.com through the employer portal. You go ahead and upload information about everybody on staff who's over 18. And using that information, we will then create Roth IRAs for everybody on staff. You, the employer, do not have to be opening people's retirement accounts. And in fact, we have really done everything we can to limit employer involvement and burden on this, so that it's really just around payroll administration. You'll notice there up on the screen that at any time, you as the employer can designate a third party if you're working with a bookkeeper or payroll provider who says, hey, I'll take care of this for you. At any time, you can do that and you can have them run through it. I should also say that many payroll providers have made a point of really integrating their systems to make this work very smoothly with the earned system. That's not all payroll providers. There's a lot of variety, and in some cases, payroll providers are charging, some are not. So again, please go to earnsdelaware.com. There's great information about all the payroll options available to you, and check that out. What I'm describing today is the most you would have to do, the most you would have to do. All right, so after that initial registration step, which involves uploading information about your employees, that's the last piece of the registration step. We then step in as Delaware Earns. As I mentioned, we will create Roth IRA accounts for your employees. We then drive the communication, and this is true as the program goes forward. We are the ones driving communication with the staff. So we will contact your staff members either by email if there's an email. No email, we just send a letter letting them know, and this is important that they pay attention to it, letting them know that they have been enrolled in Delaware Earns, and unless they decide to opt out, within 30 days, they will start to see a deduction equal to 5% of their gross check going into their Roth IRA. So this is we call it a decision period. Employees can opt out of Earns if they have to during this period before anything is taken. They can always opt out later as well. That's not a problem. As I mentioned, at the employee level, not the employer level, but at the employee level, completely voluntary program. If somebody opts out, they can always opt back in as well. All right, so once that 30-day period, this 30-day decision period has passed, has elapsed, that's when the employer or whoever's doing payroll does need to step back in and start taking action. So you do need to create payroll deductions within your system. I've had many people compare it to creating a deduction, say for an HSA in the system. So that does need to be created. And then going forward, so every time you run payroll, you should be taking these contributions and remitting them through your bank, drawing from your bank checking account. That should be happening every time. There's also another piece to this step 2, which is you need to, forgive me, I'm just going to click back here. You need to, every time you run payroll, you need to securely upload a template that breaks down the contribution amounts for each employee. And that is, again, done through earnsdelaware.com, through the secure website. You have your employer portal. There are fantastic resources on earnsdelaware.com right now. There are videos that show you how to do the initial registration, and then there's a video that walks you through this second step that I'm discussing right now. And there's all sorts of FAQs, so there's a lot of help. I should say each of those little videos are about 5 minutes long each, so that gives you an idea of how quickly this can go. And then the very last piece in terms of employer responsibilities, as you might expect, you do need to maintain this. So as people are coming and going, leaving your employ, you do need to take people who've left, take them off the roster, add new people, of course. So it's just a logical step. So this is not a one and done thing. You need to register, then you wait 30 days, then you start running the payroll contributions. And then going forward, you're doing it every payroll period. So if you're doing it every other week, you're every month, or in some cases, if it's weekly, then you're doing weekly contributions. So it's every payroll cycle. And then the third step, of course, is you just have to maintain it because you need to be doing this on an ongoing basis going forward. But that's certainly That's the limit of it. It all revolves around payroll. And I should say, in terms of the timing of all this, if you register, say, for example, you register on the deadline, October 15th, you upload the information about your employees. We'll then create the Roth IRA accounts. We'll then communicate with them. We'll reach out to them. And that means that your first contributions that you would run, that you would be making to their Roth IRA accounts, would be sometime after November 15th in that example. So 30 days after October 15th. It's your next regularly scheduled payroll after the 30-day decision period elapses. So if it happened to fall on November 15th, then you would run it on November 15th. Again, this is the example of you registered on October 15th. But if payroll is not for another couple of weeks or even a month, that's not a problem. You don't have to jump in and run a special payroll cycle. It's just on the normal cadence going forward. Every time you need to be sending in those contributions. And you do need to do all 3 steps in order to be in compliance with the requirements. All right, so that's it though. As I said, it's all about payroll administration. Employers will not incur any fees from us to administer this program. Now, I've spent most of my career in and around retirement planning. I am not aware of any other way an employer could provide access to retirement savings accounts without the employer having to pay at least something. Again, we do not charge employers anything. So that's a real big distinguishing point when it comes to Delaware Earns. Also, you do not have out-of-pocket costs because there is no matching with this program. There's no matching with Delaware Earns. It's designed to really as much as possible, avoid out-of-pocket costs for employers. Even if you wanted to, there is no matching with Delaware Earns. Lastly, that middle point, it sounds a little bit technical, that you don't have plan sponsor liability, or sometimes called fiduciary liability. This is, however, an important point. As an employer, you should be aware that if you go ahead and establish a 401k, you are assuming a degree of liability. You have to ensure that the plan has reasonable cost and reasonable investments. That level of liability for employers does not exist with Delaware Earns. The state treasurer's office, as we discussed, we are sponsoring this. We have carefully vetted the program, so you have less liability if you plug into Delaware Earns. All right, I want to turn back to employees. And again, we are driving, Delaware Earns is driving the communication, the education with your employees. Of course, you're going to get questions, and that's to be expected, but you can refer them to the website, refer them to call in. There's numbers for employees to call in. We have great help available in both English and Spanish. So we will be taking the lead when it comes to notification. And as I said, once you complete step 1 of registration, which includes uploading information about your employees, we will connect with them. We will let them know about this. I should also mention, and I'm going to talk a little bit more later on about the Roth IRAs, but these are Roth IRAs in every respect. So you have the standard contribution limits. You can see those up on the screen right now for this year. And as you may know, those typically get adjusted from year to year. And under Treasurer Davis, as I've mentioned, we have given a lot of thought to how to avoid making this a burden for our small businesses, to make it as easy as we can, to do everything we can to avoid out-of-pocket costs. For employees, we have also given a lot of thought to how to make this as simple as possible. So we have created what is, in effect, I like to call it an easy path or a default path. So the employee really doesn't have to take any action or make any decisions or know anything about taxes or investing initially to end up with a good outcome. If they don't take any action, they end up with a good outcome by default. So by default, Roth IRA gets opened up for them. By default, a contribution level of 5% of the gross check is set. Now, these contributions are, with the Roth, they are always after tax, but it's it's equivalent to 5% of the gross paycheck. And then also investing, obviously, investing can be intimidating to people, and they might not know a lot about it, may not care to know a lot about it. So just by default, the employees will get put into an ideal investment for long-term retirement investing. These are the target date retirement funds. And the great thing about these is, likewise, it all works on autopilot for the saver. The mix of investments adjusts automatically as they get older, so that it's always appropriate for their goal. That said, so we have this default path, this easy path, as we like to say, but of course, savers, employees can customize. They can adjust how much they're saving. They can elect to have what's called the traditional IRA. This is where the contributions, they can take a deduction for their contributions. They also can select from certain investments too, if they like. So that's certainly available to them. So I think I've covered most of this for us, but I do want to spend a moment talking about the Roth IRA, which again, that's one of the things that makes Delaware Earns a very different kind of retirement program, is because it's built on the Roth IRA. As you may know, retirement plans typically rely on pre-tax contributions. They call these traditional contributions. With the Roth, these are after-tax contributions. And I think the Roth account kind of makes it the secret sauce of the Earns program, because it really has some great potential benefits to a large part of the population that we're seeking to serve. Number one, the Roth IRA is completely portable. As you probably know, at this point, the Roth IRA is kind of universal. So there's any number of firms that the employee could move the Roth IRA to once they leave employment. For the employer, the portability is nice as well, because the employer is not involved at all once the employee leaves in what to do with the account. The employee can keep it with Delaware Earns, or they can roll it off somewhere else, but that is not a concern of the employer. So it's another thing we've done to try to minimize the burden on employers. Secondly, because these are after-tax contributions going into the Roth IRA, at any time, a saver can access their original contribution amount. So say they put in $100. At any time, they can pull out that $100 with no taxes and no penalties. And we recognize, especially the population that we're seeking to serve, there can be urgent financial situations where they need to get access to their money, and so this allows them to do it. Lastly, there are very powerful tax benefits, long-term tax benefits associated with the Roth IRA, and business owners can benefit from these as well. If you're eligible for a Roth IRA, I would strongly urge you to consider participating in Earns yourself, because what the Roth IRA allows you to do is, if you give it enough time, if you wait till about age 60 and you've had the account open for at least 5 years, not only are you able to pull out your original contribution amounts tax and penalty free, at that point, once you're old enough and you've had the account open long enough, you would also be able to pull out all of the earnings completely federal and state income tax free. So that's a really a powerful benefit for savers. And just to give you an example, if somebody saved just $40 a week, they started early and they kept at it as long as they were working. Once they got to retirement age, and say they earned a typical return of 8% annually, once they got to retirement age, they would be looking at more than $500,000 in that Roth IRA account. And they could then draw on those funds completely tax-free to fund a really good lifestyle in retirement. And I think especially this will be valuable if we see tax rates increase in the future. So again, if you know, for the employees, but also for business owners and employers, if you're eligible for a Roth IRA, everybody's financial situation is different. So it's not, there's no one size fits all, but certainly look into it because many people do benefit from the Roth IRA. All right, so just some wrap up here. I talk a lot about small businesses and how under Treasurer Davis, we really strive to make this not a burden on small businesses. That applies very much to our great nonprofits in Delaware. Nonprofits are also covered by EARNS. They are, if they meet that criteria, 5 or more W-2 employees and no qualified retirement plan. The nonprofit also needs to be facilitating this program. So be aware of that. And as we mentioned, this is a mandatory program. If you're an employer that falls into the category that I was talking about, you do need to be facilitating this program. We certainly are pursuing this in the spirit of partnership, the opposite of a punitive spirit. But if there are employers out there who, you know, given enough time, and we're happy to assist, but if time goes by and the employer takes the stance, well, I'm not doing this, I don't feel like doing this, you could face administrative penalties, and you can see them, they're significant. So do keep that in mind. As the program director, I'm hoping that actually I don't think it should ever come to this, because there's really no reason not to facilitate the program if you're required to. Because again, we're not charging employers anything. And as Treasurer Davis said at the beginning, it allows you to offer a competitive benefit at no cost to you, the employer. So please follow through on this. If you need help, reach out to us. And I'm going to share our contact information, and I'll leave that up. We welcome your questions at any time. We're eager to assist you. I should also say we've been very fortunate in the Treasurer's Office to have some fantastic partners throughout the state that have worked with us in trying to get the word out. We're certainly grateful to them. AARP being first and foremost, but you see a lot of great organizations are behind this, and they see the benefit of it. So really hoping you'll work with us. And here is all of our contact information. The website is a fantastic resource, earnsdelaware.com. You can, for client support issues, write to client services at earnsdelaware.com at any time. Likewise, we have a great private sector partner that we're working with. It's a very responsive company, but they are overseen by the Treasurer's Office. So if you need the Treasurer's Office to get involved, if you need me to get involved, or you have questions from the Treasurer's standpoint, write to us at earns@delaware.gov. You can see the phone numbers up there. As I say, the call center has been up and running since July 1. Assistance is available not just in English, but in Spanish. So really, we would think nobody would be left out, and we're ready to assist. And thanks again to the AARP for giving us this opportunity. And thank you all because I know how busy business owners are. And so thank you all for taking the time this afternoon, and looking forward to your questions.
Well, Ted, as always, that was absolutely fantastic, and I think a really wonderful overview of the EARNS program. We do have a few questions already coming in via the Q&A, and so if folks have not already, please go ahead and ask your questions via the Q&A button, as it helps us track them. But I want to start off with one which is kind of a question around eligibility. So we know there's a few employers that already have some sort of retirement program for their employees. Maybe not all their employees are covered, but they are covered in some. They have a retirement program that's covering some of them. Do they have to register for this program? What's the status for those that already offer some sort of retirement account, even if it's not for everyone in their, not every one of their employees?
Really appreciate the question, and it's important for me to clarify on that. If you're an employer and you sponsor the 401k, the simple IRA, the SEP IRA, the 403b, that whole range, and again, that list is available on the website, but the standard qualified plans, you are exempt from earns. You do not have to facilitate earns, even if the eligibility doesn't match up. I know in some cases, it's perfectly legal within a qualified retirement plan to exclude certain employees, maybe hours of service or part-time or something like that. You are exempt from earns. We are asking, especially as an employer, if you have received a notice from us and we say, please register for earns, and you say, well, what are you guys talking about? I have the 401k. That's fine, but please just go to earnsdelaware.com before October 15th and just go in there, put in the EIN, and then it's very simple. You just click, you're basically just clicking an attestation that you have this employer-sponsored plan. And it'll be nice for you too, because then we'll take you off the list and you won't keep getting these letters. So if you do have I'm tempted to say if you have a 401k, there's really nothing you need to do. But there is, especially if you get a notice from us, please just let us know that you have it by going to the website and certifying that you have it. It's very easy. The registration admittedly involves a few steps. This certifying that you have the plan is very quick and easy, and please do that.
I see. We got a few questions from folks basically asking if they already do have some sort of retirement plan, can they offer earns on top of it as well?
And happy to follow up with any specifics, because there's always facts that might change things. And again, you can get us at earns@delaware.gov. That comes to me and my colleagues. But if I understand the question correctly, no. I mean, earns is meant to be really for those employers that do not have the qualified plan in place. If you're not required as an employer to facilitate earns, you really shouldn't be stepping in and doing so. That said, it is a fantastic program. So if you have people on staff who are not covered by your qualified plan, it is certainly fine to mention to them, to make them aware in a neutral way that the state is now providing a way for them to save for retirement. earnsdelaware.com. The employees, if you're not covered by earns, your employees can go at any time and open up IRAs with us and contribute to their banks. I've done this myself just to test it. It's very, very easy. I linked up my bank with it, and it was very easy to make contributions. And also, if I ever needed the money in a pinch, I can send the money back to my bank at the contribution. So if you're outside of earns, but you know folks that you think would benefit from it, certainly, no problem with just making them aware. They can go to earnsdelaware.com. They can open up their own Roth IRAs. And I can tell you firsthand, it's very easy to do, and it's great. And you get all sorts of updates and communications from us. So everything should be clear.
That's great. And Ted, can you remind everyone how people get their access code? How is earns communicating with employers? What should they be looking for? And if they don't have that access code, how can they go about getting that to ensure that they've done what they need to do, whether that's opting into the program or attesting that they already have a qualified plan?
Perfect, certainly. And so obviously outreach is vital to the success of this program. And so we're eager to share the word. We worked with the State Department of Labor to assemble a list of all Delaware employers to which we thought earns applied. We then sent out letters to these thousands of employers up and down the state. And these will say Delaware earns on them, and when they come, you'll readily be able to see that it's Delaware earns. As I mentioned, certainly, our data is not perfect. We might have had an out-of-date address, so it may never have reached you, or for some reason we just might have missed your business, or it wasn't in the database. So certainly apologies for that if you don't have the code. But again, it's not a deal breaker if you don't have the code. If you didn't get the letter, but earns, you're required to facilitate earns, please, because we will catch up with you eventually, please go to earnsdelaware.com. You put in your EIN, you put in the EIN, and then you'll see a link that says don't have your access code. You should then be able to enter your EIN and receive the access code right there and then, right there on the spot. Now, in some cases, even that fails. But again, it's not a deal breaker. If you put in your EIN and you get some kind of error message, write into that first email address you see there, clientservices@earnsdelaware.com, or call in to that first 800 number that you see there for employers, and they will generate a code for you. It takes just a little bit of time because there's some things on the back end they need to do, but they will get you the code. So if you've never gotten the code, it's not a deal breaker. You're not going to be locked out of earns. We can certainly address it. But these communications, these letters are a big part of how we're reaching employers. We've also tried to do as much virtual and in-person outreach as we can. If you know of any groups that would be interested in hearing from us, please write to us at earns@delaware.gov. We love to. We think this is a great story. We just want people to be aware of it. Going forward, as I mentioned, there will be a lot of communication to employees once we have their email, or if it still has to be their address, they'll be getting a lot of communications for us. So again, we don't want to put burden on the employers, and I hope that speaks to the question.
Wonderful. And then we got kind of two related questions about kind of the employee experience or the saver experience. So if someone opts out and they don't want to be part of the program, is there some sort of penalty on the employer? And two, if someone is laid off or no longer works for that company, what happens to their account and what happens to the IRA?
Great. And I'll take both of those. So there again, the employee part of this, the saver part of this, is entirely voluntary. Employers are not, there's no obligation on employers to get people to sign up. In fact, we just want you to be neutral about this. Just let people know it's available. State's making me do this. You do not have to go around and sign people up for this. That's my job. So if a low percentage of a staff is not participating, that's not a problem. There's no penalty there. The flip side of that is, of course, if we heard of any situations where an employer was going around and saying, hey, don't sign up for this because it creates hassle for me, obviously that would be looked into. But the employer, you're not, if folks decide not to take advantage of it despite our best efforts, that is absolutely not the employer's responsibility. Maybe it's my responsibility to follow up and explain to them why they should, but it's not the employer's responsibility. So no concern there. And then as far as, I know some businesses have very high turnover, which can make it challenging. That's one of the advantages of Delaware Earns versus a traditional retirement plan. You as the employer have no obligation. Once somebody leaves, when they're working for you, you very much have an obligation to send in their contributions in a timely manner. But once they leave your employ, voluntary or otherwise, you don't have to keep track of, at least in terms of the Roth IRA account, you don't have to keep track of them, that you don't have to worry about that. And the way it would work for the employee is say they move to a new role, and in the first example, the new employer does not have Delaware Earns. The employee could then simply leave the account with us, or they could decide to roll their Roth IRA somewhere else. If that new employer was part of Delaware Earns, was facilitating Delaware Earns, it makes it even easier. The new employer would just add them, upload their information to the website, but the contributions would go into the existing Roth IRA account. We have a lot of safeguards on the back end so that only one Roth IRA within Delaware Earns gets opened up for everybody to avoid kind of confusion. So employees have a lot of options when it comes to, after they leave a job. But again, the great news for employers is that's not your responsibility. Once someone has left your employ, you'll just within the employer portal at earnsdelaware.com, you'll just note that they're terminated, and that's the extent of it.
Thank you. Two kind of quick questions. One, can you talk about saver eligibility? So what does that look like for part-time employees, or who has eligibility on the saver side to join the program? And can you talk about, I know you mentioned kind of the auto escalation feature of earns. Is there a cap on what that auto escalates to?
Sure. So earns is designed to cover part-time workers. So if somebody's getting a W-2 from you, and even if they only work very few hours over the course of the year for you, they still need to be, you need to upload their information. They can still participate in Delaware Earns. As you might imagine, it's the part-time workers who are least likely to have something at work that they can save into. And that's why we're including part-time workers. But again, it's only if you don't offer a qualified retirement plan. So if you don't offer a qualified retirement plan, register for earns. Both full and part-time workers are eligible to participate. And then the second question, Colin, I'm sorry.
Was a question around auto escalation. So is there on that?
Yeah, and thank you very much for the questions. It's a really good one. So as I mentioned, we did set a default contribution rate of 5% of the gross paycheck when somebody joins. As I also mentioned, somebody can adjust that down to as little as 1%, or they can adjust it higher if they're in a position to save more. To keep nudging people towards retirement security, you'll notice that's a theme in the way we have structured this program. Leveraging the insights around retirement planning, the best practices, everything is designed to kind of give people a nudge to save and then save more. So the auto escalation that Colin's referring to means that once a year goes by, a worker's default contribution rate will increase by 1 percentage point, again, unless they opt out. They could keep it at 5 if they want to, or they could just go along with the auto escalation. And again, if they're able to, it's in their long-term best interest to go along with the auto escalation, the 1 point increase. And that continues. So it auto escalates every year for a number of years. Obviously, if you did that forever, you might create some problems if somebody wasn't really watching this. So we cap it at 10%. So no matter how long somebody is in the program, we would never auto escalate them beyond 10% of their gross check. And it would take years to even get to that 10%. I should say, ideally, you would be saving 10% or maybe even a little more of your check. That's why we auto escalate people up to that. We want to start with 5%, get them used to the idea of saving, and then gradually auto escalate them. But again, it's voluntary. It's not like they can't, if they can't do it. And we recognize there are certainly people, they can't afford that additional point of their check. And that's not a problem.
Thank you, Ted. Two kind of quick related questions. The first is the owner of a small business considered an employee as it relates to this program? And two, can employers that have less than 5 join earns?
Great. So as far as whether the owner counts as an employee, if you're getting that W-2, you would count as one of the 5. So if you're getting paid in a W-2, and there's 4 other W-2 employees, then yes, you would meet that 5 threshold. If you're not paid in a W-2, then no. But that's the answer on that. And we really appreciate the question about employers who would like to do this voluntarily. They only have four employees. 3 employees, what have you, and they'd like to do this voluntarily. At this time, for certain legal reasons, you can't facilitate it in the way that I talked about, where you're uploading everybody's information to the website. You should not do that. But if you're concerned about your employees, and I know many people are, being able to save for retirement, please let them know that they should look into Delaware Earns, earnsdelaware.com. And as I mentioned, they can open up, it's very easy. Even I was able to do it, open up a Roth IRA and start making contributions through your bank. So that's how it works. Now, if you are, and again, as you might imagine, as you dig into this, there's a lot of legal technicality, so I don't want to bore everyone to tears, but if you're the only one in the business, if it's a one-person operation, you could decide to basically facilitate Delaware Earns for yourself. There would be no problem with you plugging into the payroll and doing it that way. So there's just this little, if you will, kind of donut hole of between 2 and 4 cannot facilitate it. You would just have to suggest to employees that they look into opening their own accounts. But 1 and then 5 or more, knock yourself out. We'd love to have you.
Amazing. And then we only have a few minutes left, so we're only going to get to a few of these questions. But can you talk a little bit about how Earns interacts with payroll providers and helps ensure that the payroll providers themselves have information about this program? And then the second one is, well, let's just start there, actually.
Okay. So yes. So because everything that the employer has to do revolves around payroll, we recognize what an important group of stakeholders the payroll providers are. And we have done a lot of work to try to get payroll providers to if you will, integrate or make their system so that they're taking over some of the steps, that they're syncing up with their with payroll every time you run it. So again, if you go to earnsdelaware.com, you can see the payroll providers who are, as they say, integrated, who are providing support and doing that. And there's also plenty of information actually for payroll providers themselves on the website. At any time, a payroll provider can request, if they don't have this so-called integration where where you're able to provide additional support to clients, at any time they can write in and work that out with our program administrator. There's an email address on the website that payroll providers can use to pursue this integration. In some cases, we have heard that payroll providers are being very hands-off and are, it varies from payroll provider to provider. But even if your payroll provider is not working with you on this actively and stepping in to help, the steps I showed you, those 3 steps, register, make the payments, maintain the records, you can all do that on your own, and it will take you some time, less and less as you get used to it, but it won't charge you anything, because I know some payroll providers, and it's a business decision. In some cases, they're charging for providing assistance, and in that case, you as the business owner just have to weigh: is it worth me paying them, or should I do this completely on my own? But again, Earns does not charge you anything. And as we look forward, we're eager to work with the payroll providers and have that list of payroll integrators grow.
And for the businesses that don't use online payroll, there are systems in place to ensure that they can get be able to facilitate the program, correct?
Yeah. So again, go to the website. If you have questions, there's a ton of information for employers. The whole section of the website is devoted to that. I should also say the website most of it is also available in Spanish. And then if you have any further questions, any technical questions, please write into that client services or just call up. They're there Monday through Friday, 9 to 6. these types of programs actually exist in 9 other states. So there's actually a lot, I know it's new to us here in Delaware, but there's actually a lot of experience helping employers sort any specific issues out. So we're eager to do that. So if you're having any problems, call in or write in. You're not on an island on this. We're here to support you.
Well, Ted, I mean, I think that is such a great summation of our time together. We have one more question, and then I want to give it to you for final thoughts or the pieces that people want to take away. But I just want to reiterate that these numbers, the email and the phone number you see on here, these are resources for you, and we encourage you to use them. And we will follow up via the email that you registered with a recording of this, with a number of additional resources as well, to be able to make sure that you have what you need. But Ted, you know, the last one is, you know, even if an employer is already offering a qualified plan, but that employee is not covered by that qualified plan, they can go opt into Earns themselves. And how would they go about doing that?
Certainly, Colin. So in that example, there's a qualified plan that maybe excludes part-timers at the employer. The employer is completely exempt from Delaware Earns. They don't really need to take any action, but the folks who are on staff who don't have access to the qualified plan, the employer can certainly let them know that they can go to earnsdelaware.com, and it's very easy to open up their Roth IRA, and that they should certainly, you know, don't want to get into giving tax advice, but the employee should certainly explore it, because in many cases, it's really going to be to their long-term benefit. I mean, if you take anything away from today, we all need to be saving more for retirement. It's very, very important. But just cannot thank AARP enough for your support, for everybody taking the time, and really for Treasurer Davis and her leadership. She's the one that brought this to Delaware. We wouldn't have this if she didn't work for many years to do this. And if we didn't have this, we would actually, our employers would be at a big disadvantage from surrounding states, because already Maryland, Virginia, and New Jersey have this. So Delaware would be behind the curve if Treasurer Davis hadn't worked to bring Delaware Earns here.
Amazing. Well, thank you all. Lucretia, Treasurer Davis, welcome any kind of final comments or thoughts before we close out.
Yeah, no, these were great questions. Really appreciated all of the engagement, and again, just want to encourage everyone to utilize these links and the ways in which you can reach us for more detailed questions. Thank you.
Fantastic. Well, thank you again to AARP Delaware, Delaware Earns, and the treasurer. It's been a fantastic afternoon together. Again, we'll follow up with the recording and resources via the email you registered with. But thank you for joining us today. This is now the official end of the webinar. Have a great rest of your afternoon.
Take care.
Thank you.